All right, everybody, welcome back. We are diving deep today into something that could really hit home, literally.
Yeah.
We're looking at potential interest rate relief, specifically in 2025 for those of you out there with U.S. home loans.
Could be good news for a lot of folks.
Yeah, we've got some expert insights here from a loan processing company. They're right in the thick of it, seeing how things are playing out.
Definitely gives us a good perspective.
So imagine this, your monthly mortgage payment, just a bit lighter, a little more manageable.
Sounds nice.
That's what we're digging into today.
Let's face it, 2024 has been a bit of a roller coaster with these interest
Yeah,
rates.
no kidding. A lot of borrowers feeling that squeeze, right?
Big time, yeah. But hey, there might be a light at the end of the tunnel,
Ooh, tell me more.
Well, our source here suggests that we might actually see a turnaround in the interest rate cycle,
Really? That soon?
potentially as early as 2025.
Interesting.
Yeah, we're talking about a potential rate cut cycle coming up.
Okay, now when they say cut cycle, are we talking big changes or just little tweaks here and there?
Well, analysts are estimating something between, say, 0.5% and a full percentage point.
Okay. That might not seem like a huge drop, but I guess when it comes to a mortgage.
It can make a world of difference, especially over the life of the loan.
Absolutely. Every little bit counts, right?
Eh.
So let's get into the nitty-gritty here. What would this actually mean for the average person? Someone with a home loan, how would this impact them?
Right. So first off, you got to think about all the people who've been basically shut out of the housing market. Homes just too expensive, can't make those payments work.
Right, been priced out completely.
Exactly. Lower rates could bring them back in, boost that demand.
Makes sense. More buyers means.
More activity in the market for sure.
Okay, so that's potential buyers. What about folks who are already locked into a mortgage? What's in it for them?
Well, think about it. Lower rates mean potentially smaller monthly payments.
Oh, right.
Frees up some cash, right? Maybe do some home improvements or invest that money elsewhere.
Yeah, could be a real game changer for some families, no doubt. So we've talked individual impact. What about the broader economy? Does it have ripple effects there too?
Absolutely. Lower borrowing costs usually mean people are more willing to, borrow, take out loans, and that's good news for businesses. They can invest, hire more employees, really grow.
So it kind of jumpstarts the whole system.
It's a classic economic stimulus, yeah.
All right, so we've got potential buyers coming back into the market, current homeowners with lighter payments, businesses expanding. Sounds like a win-win-win situation, right? But I got to play devil's advocate here for a second. Are there any potential downsides to these rate cuts? This source is making predictions, and we all know those aren't always a sure thing.
Oh, for sure. You're right. There's always two sides to the coin. And, while lower rates sound great on the surface, we have to think about something called inflation.
Right.
Basically, when more people have extra money.
House prices go up.
Exactly. It's a classic supply and demand issue. And, it's a tough balancing act for the Fed to keep everything in
Okay,
check.
so potential upsides and downsides to consider. With all that in mind, what should our listeners be doing right now to prepare for this potential shift? Whether it ends up being good or bad, what actions can they take?
You hit the nail on the head. Being prepared is key. And knowledge is power, right? So, first things first, understand your current mortgage.
Okay.
Is it a fixed rate? Is it adjustable? Could refinancing be a good option if those rates do drop?
Smart moves.
And then, don't be afraid to explore different loan options out there, especially those government-backed ones like FHA, VA, USDA loans.
Right.
They can sometimes offer more flexibility or, lower rates, even in a shifting market.
Definitely worth checking out.
And honestly, the most important thing is to stay informed.
Absolutely. Keep your ear to the ground.
Yeah, keep an eye on those economic indicators and, just be ready to adjust your financial plans if needed.
Excellent advice. Now let's talk about something that our source mentioned. The Federal Reserve, often called the Fed.
Right,
They play a
right.
big role in all of this, right? Can you explain exactly how they fit into the picture?
Sure, yeah. Think of the Fed as like a giant faucet controlling the flow of money in the banking system. When they inject liquidity, it's like turning that faucet on. Banks have more money to lend, and that can drive rates down.
Okay, I see. It's like a ripple effect starting with them.
Exactly. And because of that, it's important to understand not just the interest rates themselves, but also like the forces behind them. You
Right,
know?
the why behind the what.
Exactly. So here's a question for you and for all our listeners. What specific things would make the Fed turn that faucet on? Are they reacting to economic data, trying to control inflation, or are they aiming to boost growth? Understanding their motivations can really give you a better grasp of what might happen next.
Wow. Yeah, that is a great question. I like that.
Yeah, gets you thinking.
So, wrapping things up here, it seems like we've got some potential interest rate relief on the horizon.
Potentially.
But there are also some potential risks to keep in mind, and lots of factors influencing the whole situation.
Right, and that brings up another really interesting point. If interest rates do go down, how could that impact other financial decisions you might be making?
Ooh, yeah.
It's not just about the mortgage anymore. Think about investments, savings, even those big purchases you might have been putting
Right,
off.
it's all connected.
Exactly.
They're part of the same puzzle. Well, I think that is a fantastic point to leave our listeners with. Keep an eye on those interest rates, folks, and don't be afraid to explore your options.
Yeah, and stay informed.
Absolutely. Thanks for joining us on this deep dive, everybody. We'll catch you on the next one.
See you then.
Bye.